Anyone who has been keeping an eye on the stock market knows it's been doing well. Sure, it's completely out of whack, but the Fed won't let it fall. I mean, they love us, right? Yes, it's completely overvalued by every single metric, but who looks at stats anyway? And I know that there's an economic recession on right now that could easily unfold into the worst in a century, but that's just a buy signal, I think. Oh well, I don't need to worry because Janet Yellen might make a comeback and she'll know exactly how to keep this train moving. You came here for the truth, so let me unveil that for you. That's a little bit of ridiculousness and sarcasm. I got that off my chest. I'm good to go. We're going to look at some other ridiculousness today, and I've got some stats to show you. I've got the indicators. I've got the charts. This is going to be jam-packed, I'm telling you right now. So let's go. The stock market and derivatives are sending different signals. The Dow soared back to a record this week, but Wall Street's fear gauge also remains elevated. They are talking about the VIX index, something that of course I've shown you many times. I wanted to note right here up front, if you hadn't seen me cover this previously, when you look at the Federal Reserve, they specifically admitted, Jerome Powell did admit this, I covered it here, did an entire video about it, how they have a short position on volatility. That is a quote. Okay, so you know that they are specifically trying to make these so-called fear indicators actually be pushed down to soothe and calm the markets. On Friday, the CBOE volatility index closed at its lowest level since February and briefly dipped below 20 on the intraday for the first time since then. Okay, and it just shows you here the VIX bounced off its Friday low and settled at 2084, making it 195th consecutive trading session where it closed above 20, a streak that has been unparalleled since 2009. So this level of 20, I mean, it's something that is just symbolic. It doesn't really matter in the number, but of course, I believe I have the chart here in a second. There was a big spike earlier this year in the VIX index, and ever since then, there's been some bouncing around, but the trend has been downward once again. And if you look at what happened throughout 2017, it was just like, if I show you the direction, it just kept getting lower and lower and lower and lower and lower, and everybody was shorting the VIX thinking it's just going to head lower and lower, and they were doing a really good job all the way through then. And then we saw in January 2018 everything got messed up and mixed up, and some people actually lost their shirts. Here's the fear and greed index. I'm surprised it's not higher, but anyway, we're at 92 just a month ago. Take a look at this. It was at 35. It just gives you some insight as to what's happening with the investors and what they are doing and what their mentality is right now. It's not a be all end all. I don't really put weight onto any one indicator whatsoever, but this one certainly just gives you a visual representation of what's happening now. MSCI World Monthly Performance at the highest going back. This chart goes back from 1990. We've never seen performance like this in a short period of time. I mean, come on, look at the Dow's monthly performance as well, going back to levels from the 80s. So it has really fluctuated over this period, and there have been some serious ups and serious downs this year, that's for sure. But it's just giving us the impression that something is completely out of whack, because while all of the stocks have been moving up, or let's say a group of stocks have been moving up, at that same time, we're dealing with an economic crisis that the world has never seen. When you have so many businesses that are already bankrupt or on the verge of bankruptcy, the amount of jobs that are going to be lost, the amount of people that are affected by this is truly historic, and the market has 100%. There is absolutely no consideration for that whatsoever. To me, that's really strange. Tesla has become the 6th largest U.S. company, surpassing Warren Buffett's Berkshire Hathaway. I thought it was interesting. I posted about this in my Instagram just to talk a little bit about what's been happening and how strange the markets have been when you see, look, I'm not saying that Tesla shouldn't be an important company and money investing in it, and I get that, okay, it's great, but you have certain things that are happening that are completely just out of whack. I don't know how else to say it. The market cap right here, Tesla, $555 billion, and then it's just showing you that on the opposite end, Berkshire's assets dwarf Tesla to the tune of $829 billion compared with $45 billion. So their actual assets are completely apart. But what is constantly out there is the notion that, okay, we are here with Tesla today and Tesla is going to be here at some point in the future. And sure, there will be ups and downs, but as long as you buy in today, you're going to be able to get that price. And they just keep pushing it, and I'm not exactly sure how much of what they say is actually coming to fruition. That right there is just remains to be seen. Look at the chart. I mean, this should be worrisome to anybody that's actually paying attention. I know, I get it. I'm not saying that their value should be one or the other. I don't know that. But when you look at it in just a short period of time, it has gone up so, I mean, look at this. This is a hockey stick formation. This is absolutely going through the roof. It's like a rocket ship right now. And it just gives me some real caution at this point. I'm not saying that Berkshire should be higher or whatever, but just the speed at which it's accelerating is incredibly unusual. Could it have something to do with this? Oh my goodness, global liquidity proxy. Look at the amount of money that's been pumped to the system. Look at what's going on with the S&P 500 or generally the US stock market. Obviously, this is not good when you see it over the months. This is going back from April up until today. They pump up the system with money. It ends up finding its way into the stock market. Just wanted to give you some insight of what's going on. The CBOE put call ratio right now, nobody is shorting the markets. Everybody is long. I've been covering this one from different angles, and it just shows you that everybody's piled in to basically the same trades. They're buying ETFs of the whole market, or they are looking at maybe the handful of tech stocks. And that has been really pushing this market higher. There's no doubt about it. But they're not the only stocks. And there has been some changes recently. I have some charts on that as well. In the meantime, you could see what's going on with the Bloomberg dollar index. We have moved down to a level that we were actually at back in 2015, basically the beginning of 2015. You can see the fluctuations over this period of time. It's just interesting to see how the dollar reacts with other currencies and how that affects so many different things. Remember, everything is priced in the reserve currency, so this does have an impact. And usually when the dollar is very strong, that really hurts a lot of other countries out there. So now this could be somewhat beneficial. We'll see what happens. It all depends if it's an exporting nation, if they need to import at that time, a lot of factors. Okay, so here we have a record 3-week inflow into global stocks. Okay, global equity flows obviously provided by the EPFR, and we had hit this level previously, just below it in January of 2018. Remember what I said about the VIX index? Of course, this was something that everybody thought was, so fantastic because all throughout 2017, they were pumping money in, and actually every single month throughout that period, the market moved higher. Every single month. There wasn't a single down month. It always moved higher. Then you look at what happened here just recently, and hey, is it a coincidence that we're back into this same avenue, moving money in and ignoring all the indicators? I'm not necessarily saying that we are not going to go higher. It surely looks like it's going to go higher, but in the short term, the technicals look terrible. second largest 3-week inflow ever into value stocks. So there has been such a surge of money flowing into the tech stocks, and now we'll see what happens. Obviously, you could see it over this chart here from 2012 up until the present. More often than not, value stocks have not been performing well. So you could see that at least in the short term, money has been floating in there. Maybe they're seeing the valuations looking pretty when we're noting that certain tech stocks have been absolutely flying high. Fourth largest 4-week inflow ever into small cap stocks. So that just shows you some factors here as it relates to the smaller companies. All right, now I want to talk about this. Roughly half of households not current on their rent or mortgage payments in Arkansas, Florida, and Nevada think there's a strong chance of eviction by early January. This equates to more than 750,000 homes where an eviction is the biggest worry, according to this particular survey. By metro area, the threat of eviction is most pressing in New York City, Houston, and Atlanta. So Bloomberg provided the data. You could see it right here in this chart. It actually comes from what they say at the bottom there, the U.S. Census Bureau and the Household Pulse Survey. But when you look at it from the Bloomberg chart, it just gives you some perspective. The low estimate is the blue dot. The red is the high, and that just gives you some perspective, like I said, into what we could expect. It doesn't mean that that's going to happen. We don't know what the government's going to do. We don't know if they're going to push it off further. Maybe it'll be certain areas that will be hit and others will not, but it just looks really, really depressing at this point here because so many people will be out on the streets if that actually does come to fruition. We'll see. General Motors is looking to get back into the banking business. The automaker's lending arm is drawing up plans to apply for a banking charter, a move that would allow it to accept deposits and expand its auto finance business. I don't know if this is necessarily a good thing because we used to have rules and regulations that tried to keep these different companies away from getting into people's deposits. And that's the biggest thing, I believe. All of these different financial companies, they are supposed to be separate. If you're doing one type of investment, you cannot take people's deposits at the same time. If you're an investment company and somebody puts money with you, then that's a different story. They take the risk. But as a depositor, you expect that your money is being held there. You know it's not. The fractional reserve system, forget about all the fraud. Forget about what's going on behind the scenes. Just with that alone, the fractional reserve, I mean, my goodness. But this right here, we'll see what happens. But it's just never good when companies start to do this and take so many risks, and it could affect regular people and their deposits. Quick update on this. China on Friday added wine to the growing list of Australian goods now barred from its markets. Australia and China going back and forth on this. I'm just trying to keep you up to date. This is some of the products that are dealing with these issues right now. Of course, it's going to have an impact on these different industries, on the people, the jobs. Look for the prices to have an impact there as well. I'm not sure exactly how far this will go, but right now, not looking good. This is an issue I talk about extensively, and it's looking at the robotics and the automation and how this will impact people's jobs. And now we get this article out of The Guardian, robots on the rise as Americans experience record job losses. Now this right here is kind of half the reason why I'm showing you this. Doesn't that just freak you out, really? I mean, I look at that and I'm thinking, I would never want that thing in my house. I mean, that is freaky. That's just freaky, and I'm going to end it there. You can let me know what you think in the comments section. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn how to sell stuff online, e-commerce right now is the most important time. So definitely check it out for free, the AmazonGPS.com. If you want to learn about the financial system from top to bottom, everything you need to know is in here. These two books, check it out. The link in the description. If you want the audiobook instead, themoneygps.com. Wait, have you seen yesterday's video? Because I covered probably the most important video I've done in so long about this central banker. You've got to watch it. Click it. I'll see you there.